Tonight's top story, North Dakota's economy slumps in the second quarter. What could this potentially mean for you and your family? Good evening and welcome to 630 Point of View. I'm Chris Berg. Thanks so much for joining us. Well, it was reported yesterday that taxable sales in North Dakota dropped 16% in the second quarter compared to last year. Now, in large part, obviously, due to the falling oil prices. But let me remind you about something. It was also reported last week that personal incomes, yes, your income and mine, also are going down in North Dakota, at least as far as the second quarter. And I know it's only a little bit, but still personal incomes down slightly. Here's where I think things could get very, very interesting. The number of active oil rigs in North Dakota has declined over the past year from 191 down to just 67. Good news is oil output has actually remained fairly steady, but the tax revenue from the mining and oil extraction sector was down by nearly a third. And on top of this, just yesterday, the former head of EOG Resources, a company that's got a pretty good-sized play in North Dakota, well, he said U.S. oil output is on the brink of a dramatic, those are his words, not mine, a dramatic decline. He also went on to say the main reason for the decline will be because there will be a lack of bank financing for new shale plays. Now, obviously, nobody knows for sure where oil prices are headed, but everyone I talk to says, hey, North Dakota could continue to see declining tax revenues for quite some time. This obviously is leading people to beg the question or ask the question, can North Dakota sustain our fairly dramatic increase in ongoing spending? As you can see here, we've increased our ongoing spending by 115% since the 2007-2009 session. It is more than doubled. Obvious question is this going to be sustainable? With us tonight to answer this question and much, much more, a couple of people actually have taken part in the 2015 North Dakota Governor's Summit on Economic Growth. It's happening tomorrow in Fargo at the Radisson. Joining us tonight, Pete Stingem and also Andy Peterson. To both you guys, thanks so much for joining us. We appreciate it. Andy, let's start with you. You're a policy guy. You look at all this stuff. Is our spending sustainable when you look at where oil prices are at?
So a couple things there. I think that we're good in the next session. We've got a lot of reserves. We've not overspent. We've not committed to things we don't have. So I think that it is sustainable on that front. Our policymakers are pretty conservative folks. And so, again, we've not bonded, that kind of thing. So I think it is sustainable in the near future. It depends upon where oil prices go in the next 4 or 5 years, I think is going to be really the big question.
So with that being said, we've obviously made a huge commitment to K through 12 education.
Right.
Is the property tax buy down sustainable?
Well, again, it's sustainable in the next session. Beyond that, I think we have to start looking at some things and maybe tightening our belts. But again, that could change pretty quickly in the world depending upon oil prices. One major catastrophe in the Middle East and oil prices could come back pretty rapidly. So again, it's really tough to say where we're going. Again, I'm pretty thankful that we have a pretty conservative legislature that doesn't spend the money we don't have. As far as the property tax buy down is concerned, I think, again, we're safe in the near term, but in the long term, we'll see where that goes.
Peter, you're originally from Watford City. You've obviously got close ties to what's going on out there at West Watford City. I mean, that's in the heart of the Bakken, and they're going to continue to pump there if oil is even at maybe $10 a barrel. It's getting to be so efficient. But the thing that really jumped out to me was the gentleman that used to be at EOG saying, look, the reason you're going to see this decline is because bankers, you know this game better than I do. From what I understand, they go and check oil companies twice a year and evaluate and go, hey, do you guys still have the resources? Can we leverage you some more or not? But he's saying, look, these guys are over-leveraged. They're not going to continue to lend to them because they're so over-leveraged and where prices are at. Are you seeing the same thing? And do you see that poses problems for North Dakota?
You know, being from Watford City, we're not seeing the same thing. I think too many Wall Street types read the headlines and think they get a little scared off when they shouldn't. What we're seeing, we're a community bank, so we deal with relationships, so we look forward to having long relationships. We know oil companies see oil as a long-term play. It's not a 1 and 2 year thing. So I'd hope that people don't get scared out just because prices have dropped a little bit. I do think you have to look more long-term. And those that are getting scared off, it's competition, so you're always going to have somebody else that'll step in and probably back somebody that has a good idea or a strong company with good values and good management.
So as a banker, what do you see when you see the rig count go from whatever I said, 160 some or 191 down to 67? You guys both know, I mean, a new rig is just like a new job creator. So out west, what are you seeing and what does that mean for you as a banker?
Yeah, you've seen rigs lessen, but the thing is rigs used to drill a well in 30 or 40 days, and now they're drilling that same well in 17 or even down under 7 days. So you're getting a lot more efficient. So we might be still putting the same number of new holes in the ground. It's just becoming more efficient, and oil companies are benefiting. They've been able to lower their costs as well, which helps everybody.
But does it end up being a good thing at the end of the day? I mean, efficiencies, don't get me wrong, those are always good, but obviously the more efficient they get at drilling, because one thing I don't hear a lot of people talking about is, and I think right now maybe they're pulling 8% of oil out of the shale rock. If that bumps up to 15, 16%, a lot of people are talking about as technology progresses, then isn't it putting more of a supply gut out there on the market, thus keeping prices down?
Well, it could put a supply glut out there, but remember that the more efficient the oil companies get and the drilling gets, at the end of the day, it's cheaper for the consumer. When it's better for the consumer, he or she
you and I
has more
both
money
know the
to
shale
spend.
play, you need a certain price point if you're going to continue to
You have
drill.
to do that, but again, if it comes up just a little bit, the competition and the efficiencies we're talking about here really could drive production. Again, that keeps prices low for everyone. At the end of the day, if prices go up another $20 a barrel, you'll see production come back pretty quickly. You'll see rigs hiring again. You'll see production again. It'd be good for the state in the long haul, but that's where you have to look at it, in the long haul, not the short haul.
I agree.
I think the biggest thing that North Dakota needs, though, is export. I mean, we struggle getting our oil out to the market, and I mean, if we could sell it overseas, a lot of the refineries were built a long time ago, so it wasn't set up for the sweet kind of crude that we have. Is more of a sour crude. So if North Dakota can figure out a way to export their oil, I think that'll help.
Obama could do it with the pen in his phone. I got about 90 seconds left. I want to give you each 45 seconds to talk about tomorrow. Big Governor's Economic Summit taking place at the Radisson. If you still want to sign up and go, you can, but 45 seconds each. What's going to go on tomorrow, and what are you going to be talking about, obviously, for North Dakota?
We're going to be talking about diversifying our economy, where we have diversified it, and what our potentials are for the future. So I think it's a good thing. I think our governor's looking in that direction, and I would commend him for doing that.
Peter, for you, other than outlaws, what are you going to be talking about?
Besides outlaws in Western North Dakota, I'm going to talk about financing in the future, what banks look for, access to capital markets, how venture capital probably plays into that. We have a great panelist. His name is Mike Tokars. He's a billionaire out of New York, and he's going to share some of his experiences and how he deployed some of his capital into North Dakota. Much like you're seeing, countries like Russia and China, as well as New Yorkers, deploy their capital into Western North Dakota, and I think that's due just to the strong North Dakota economy.
I think you just gave me the big one. Tell me that Russia and China are now investing in North Dakota. Oh, my gosh. Look out with what's going on over in Syria. To both you guys, thanks a million. I appreciate you being here. Have a blast tomorrow, okay?
Thanks.
Thanks, Chris.
All right, the end of the show and our tonight's final view. Big question is, hey, do you think it's important when your son or daughter's in history class that they're being taught accurate information? Find out how one mom and a son are making a difference. And then coming up next, ESPN Sports Center on the roads in town. It's homecoming week. And, oh, yeah, by the way, there's a pretty big football game as well. Beth Houle joins me for our Bison Breakdown segment right after this.